With us, President Yardeni Research. Ed, good to have you with us here, as always, on the program. Thanks very much for your time. The jobs sort of data out of the U.S. look like sort of consistent with the soft landing thesis. So that's good news. But what was but yields went up some 7-8 basis points. The 10-year dollars strengthened. What was that about?
Well, financial markets tend to look ahead, as you know, and I think the markets concluded that, it was good news, but now we must move forward and see what's next. And what's the big number that's coming up next is on September 13th, and that's the Consumer Price Index. So that'll be a very, very important number. And I think the market's starting to be concerned that we've had 2 great months on the inflation front, and we could have a setback perhaps in the September reading. And if so, that would incline the Fed to actually raise interest rates by a quarter point at the September 20th meeting. So I think it's just a cautionary move, concern that things might not go smoothly up ahead here after going very smoothly during the summer.
Ed, hi, good morning. So from the Fed, your expectation is that there could be a 25 basis points rate hike, and then what? Do you expect the Fed could indicate that this is the end of the rate hiking cycle?
I think it's all going to CPI number that comes out, and I'm inclined to think that it might be another good number, but I've seen something called trueflation, which is consistent with that view. And then there's the Cleveland Federal Reserve has an inflation nowcast that looks as though inflation might be running a little hotter in the August number that we will get in September. So I'm inclined to think that the CPI will be reasonably moderate, and that the Fed will hold off for a meeting to see how the forthcoming indicators are going to play out.
Hi, good morning, Mr. Yardeni. How do you expect the equity markets to behave, though, particularly emerging markets like India? We have had a good run. Earnings visibility is there.
Yeah.
But now a couple of problems are propping up because China is pushing in some stimulus. Monsoons out here not that great. Your view on the Indian markets?
Well, I think that all emerging markets are facing some issues with regards to the Fed. If the Fed keeps interest rates up here and bond yields are under some pressure to move a little higher, especially in emerging markets, that is not good for emerging markets, the stock markets, including India. And if the price of oil continues to go up for countries that import a lot of oil like India, again, that's a negative. Look, India's had a great move here. India's outlook remains very bright. I think India needs to do more on the infrastructure side, because I think that there are a lot of companies that do want to move out of China and move into India. But one of the basic problems is infrastructure, ports and roads and railroads. So I think there needs to be more spending there. But then again, it was good news that India was able to land it was a soft landing of a spaceship on the moon, and shows that India certainly has the technical prowess to accomplish great things. So I think all in all, I'd expect India to kind of go sideways for a while, along with other emerging markets.